right. Welcome, everybody. Sit down. It's time to get started here on this Wednesday morning. It is August 6th, 2025. It will be about 112 degrees here in the Phoenix area today, which absolutely sucks. Yeah, you can tell I'm quite thrilled about it. So came off of a nice humid island. S&Ps this morning are up 11 handles. We're about to open right now with a rather mixed bag of goods. Like if there's one thing you would look at this morning and say is, first of all, there's no question that the S&Ps are still fully sketchy. Yesterday actually pointed that out. Everybody's like, there was this huge rally back on Monday, and then Tuesday we got a little sketchy yesterday. There's just no question. Things deteriorated quite rapidly after the cash open, quite surprisingly, at least from my perspective. And right now, if the marketplace was summed up to one underlying, that underlying is Apple. You have a bid under the marketplace because of Apple, because the White House is going to announce something about Apple, something about manufacturing. We're going to bring iPhones home, man. Making iPhones again in the U.S. I'm sorry. I do not think this is a great idea, but that's besides the point. Yes, it's just an opinion. All right. Anyway, we'll see what the official announcement happens to be, but it's gonna be an interesting one. But the entire marketplace is summed up to Apple, because when you look around the list of the usual suspects, what do you got this morning? The financials are mildly bid. The energy sector right now has a very, very mild bid under it. But when I looked around at some of the technology, like Broadcom's flat. AMD's actually taken a pretty big hit this morning. I'm actually surprised other products aren't down because of it. Tesla's flat this morning. Nvidia is actually taking a little bit of a hit, probably because of AMD, as I was saying a second ago. Meta, a little bit of a bid under it. So again, it's flat to a mixed bag of goods. Amazon has been really strong as of late and seeing some squeezes into the close and then fading off of it. So we'll look at Amazon after the cash open. There's interesting trade opportunities on an intraday basis. Let's come to today's opening bell. All right, so advanced decline line is positive, which I'm not surprised by at all. But Nvidia, a little bit of drag into this marketplace, as I was saying. Be watching Amazon out of the gate. The opportunity inside of Amazon, really strong fades. It was really strong yesterday, right before it faded. There might be, again, some kind of decent fade trades in here. Also, specifically going into Apple at the cash open. This is your market this morning. It's up just shy of 2%. I mean, there's just nothing else to point your finger at that has market capitalization that really matters. There's nothing else. I mean, you could add up all the financials, which are basically flat, all the energy stocks, okay, and they basically equal like an Apple. But Apple is your marketplace, as I said this morning. And one of the things that you look for in something like this is there a huge amount of energy being driven immediately into the call buying of Apple? And the answer is right now, look at this. You're a minute into the day. You're like, oh, it's 500 contracts trading at the ask or above. Just to give you an idea, go look at Tesla for a second. Tesla's got some size. That size, though, is called sellers in here. Okay. But everything like lately is again this trade that's driven, okay, predominantly by options order flow. And here we go inside of Apple as it pops back to the upside, and that is going to lift, okay, the S&Ps. It's just like at this point, it doesn't really matter what anything else is doing. It's going to lift the S&Ps. Meanwhile, Nvidia, remember that time it once sold off? No, you don't, because it's been that long. You don't really remember the last time it actually sold off. But Nvidia is down right now, almost to the tune of 1%. And that may not last. Again, this thing's got a little bit of a bid, already kind of going. So let's get into it a little bit deeper this morning. The tape, at least from the first glance here this morning, it's absolutely sloptastic. Okay, now look at this. Tim Cook will appear with Trump, okay, via I don't know. They're going to have this announcement. By the way, that announcement better be good. Otherwise, your 2.5% rally may not necessarily hold. Then again, it could fly from there. Yeah, you know, Tim Cook visiting the White House. I'm not sure how he feels about that. It's good. All right, onward and upward from here. The again, the trade of the day right now evidently is going to be Apple. Now, the reason I'm focusing on this so much is, okay, you can make an argument, and a good argument, that as long as Apple is up to the tune of almost 3%, okay, that the Nasdaq literally cannot sell off. I would actually buy into that argument heavily. Again, it's going to be largely predicated though on the sustainability of Apple. Moreover, maybe the announcement is something spectacular, something we're not really expecting, and the stock actually flies further. So today, unfortunately, is the world according to Apple. And again, this is going to be a consistent bid, specifically under the NASDAQ. Um, when I look at this and I try to be kind of objective in looking at this, but you look at it, I'm actually a little bit surprised that the S&Ps are not higher. I don't know if anybody else feels that way, but just taking a look at it, like we're like, wow, you don't have anything big that's down today. I mean, Nvidia, come on, that's nominal, right? There's nothing big that's really down on the day. AMD is not necessarily going to do it. AMD is down, and for those of you that don't know, AMD, this is barely down 5%. What's 5% amongst friends? But just to display, AMD is off of an earnings announcement, has dropped, and I'm interested to see because AMD now is getting a bid back under it. That may also help the likes of Nvidia. But as I'm saying, there's like nothing really down. I'm kind of surprised that the S&Ps are only up 13. Again, with one of the biggest constituents up almost 3%, you would anticipate this would be a little bit more of a rally, at least at this point. Again, the advanced decline line, ironically, is getting a little bit worse. So here it comes, people. We're rotating right now towards, if you will, some of the big tech stocks. Newsflash, I've seen this one before. So the advanced decline line is weakening, okay, but you're actually seeing more buy side specific to Nasdaq, okay. Same story, kind of different day. There's one other aspect that I want to bring into scope though. I only had like a couple of minutes before the cash open. There's okay volume in the overnight trade. Nothing really too big. The bond market is seeing a little bit more sell side activity over here. The bond market though has really light volume, like dead. Okay, so just be mindful of that. There's one thing that I wanted to bring up as I woke up this morning and I'm looking at futures, which I think probably a lot of you do. Come on, how many people here are willing to admit you wake up, one of the first things you do is you kind of roll over and look at your phone? Huh? Anybody? Roll over, look at the phone. Okay, look at the phone. Kick the dog off your feet. I don't have one, man. I don't have one. Somebody say XLU filled. XLU, we getting out of it? XLU, we are getting out of it. Okay. XLU, just so we're good here. Why the hell does that thing keep opening every damn day? Okay, you stop doing that. What did I send it out at? 86 cents? I did send it out at 86 cents. I think I sent it out at 86 cents. I don't know why. I sent it out 87 cents. Why did I fill some at 87 cents? That seems odd for me. Let me look back down here. Okay. No, I did send it out at 87 cents. Sorry. Yeah, I did. I filled some better than that though. I got problems. Oh, son of a swing and a miss. So what I was trying to do is 87 cents multiplied by 1.3 equals $1.13. So if I can actually get out of this, create opposite order, get out of it for like $1.13. Oh, that's the mark right now. He fires. Okay. I'm waiting and not filling. I'll cancel replace and just put it back in over there. All right. So work it. I got problems. A lot of problems with you people. What I was trying to get at, by the way, thank you for that one. My wife made me have a phone in another room. All right, we're out. So I'm going to work some more orders in here. Okay. Like you could actually hear me. Uh, he was like freaking out. I was like, you know. So Todd is the resident send out the Don trade. So if anything ever gets screwed up, any bad trades, we blame him on Todd. Okay, it's okay. It's okay. Todd is actually was a market maker for a lot of years. Okay, it's great when you have somebody that was a market maker for years. You can beat the crap out of them, and they actually appreciate it. The more you beat them up, possible humiliation over there. It's good. It's good. Okay, I mean it's less than probably he experienced like one on the floor in Chicago, but it is what it is. By the way, you can see I exited $1.14. Okay, $1.14 with two of them, $1.13 with a couple of them, and yeah, I was whacking out of one lots in there. Um, Works for me. So we are out of the contest in there in a big way. And by the way, thank you for giving me that heads up. Uh, we are out. Okay, onward and upward there. So what I was going to say, before so rudely interrupted by myself, today's the last day to get out of GLD for a 30% gain. Okay. One of the things that I was going to tell you, so I wake up this morning and I swear to you, the first thing I noticed, and I woke up like really early. I'm still all messed up because I've been on, Eastern time for over a month. Now I'm on Eastern time zone. Now I'm on Pacific time. The one thing I'd say about the futures, okay, they're freaking sketchy. I don't care what anybody else like thinks. They're sketchy. Okay. There is like this feel of volatility just in the futures this morning that you just haven't had. I mean, because you could wake up in any morning this summer, okay, and the S&Ps were up 13 or 14. Okay. Yeah, but they were up 13 or 14 and just out of nowhere, dip, rip. Okay. Dip, rip. They were all over the place. Um, in a range, but they were definitely all over the place. And again, I got to tell you right now, I know there was some earnings and stuff coming out, but I can't describe why that's actually occurring. And there was some decent size coming out of this, okay, this morning on a couple of these little dips. Okay, so there's still an element of a pretty extreme volatility that's being felt, in my opinion, in this marketplace. Moreover, if you take a look at the overnight low to high, okay, people, this is a big boy range. You basically traded, let's say 63.10, 63.60. You have 50 handle range, okay, a 50 handle range overnight. So I mean, the volatility's gone, really. So do you usually get 50-point ranges overnight when volatility is gone? The answer is hell no. That's actually a really big, considering the expected move for the whole week is like 133 bucks. Overnight trade, we traded 63.13 all the way to 63.58. Okay. And that's what's a little weird is the volume didn't seem as high as it should be for that kind of a range. But there is definitely an element of volatility in the air. One of the things, and again, I'm going to tell you, I was surprised in yesterday's trade. Excuse me. I was surprised in yesterday's trade. Let me actually take you through it. Okay. So we see some obviously late last week. By the way, this is a 30-day 1 hour. So it's 30-day 1 hour. Okay. Holy crap. I can't believe the NASDAQ is almost flat with Apple up that much. And this is a pretty big move right now. If Apple doesn't get like spectacular news, that's night for the NASDAQ. Okay. But let me come back to this. I will slow down. I've had a lot of caffeine. I've been up. Okay. XLU filled at Fidelity. Okay. Thank you very much, Mrs. Lippy. um, I don't like Fidelity. Have I ever said that before? For trading options, I don't like it. I don't have to like it. I don't even want to like it, and I'm never going to like it. Okay. Fidelity is really good, but it's like more like a bank. Okay. It's bank. All right. Everybody actually know who Miss Lippy is? Okay. I was watching Adam Sandler movies with my kids again, It happens from time to time. The reason we had to watch Adam Sandler movie is because the most recent Adam Sandler movie sucked. Okay. It absolutely sucked. So I had to go back in time to display to them when things didn't suck as bad as they do now. It's not like, freaking Disney is actually doing a deal with the NFL. Okay. By the way, I'm convinced that the Little Mermaid Ariel will eventually be the quarterback for the Chicago Bears, and it will be an upgrade. You can argue with that one, okay? It will be an upgrade. Bears, okay? It's going to happen. Yes, Disney did do a deal with the NFL. The NFL now owns 10% of ESPN. I could see that the NFL eventually wants to acquire ESPN, but it's more of like a streaming deal. The Little Mermaid is going to be like on the NFL channel. All right. Hey, you should hear her silent snap count. Remember, she can't talk, so you can't hear, right? So it's a silent snap count. Think about this for a second. Clearly I have. So that's what happens when you wake up like 4 o'clock in the morning. You're sitting here, okay? You're thinking about Ariel, that, silent snap count. Wave a fin when you're ready for the ball. Okay. Oh, Moana. Moana would work. All right. So continuing on over here, there's some big sell side activity that transpires on Thursday and Friday. Okay. I mean, on Monday, again, I'm the first one to say, like on Monday, yeah, no, I'm totally surprised. My weekend update was like, volatility is just warming up. I mean, literally, that was the title of my weekend update, is volatility is warming up, because it really, like, all your volatility indicators, they got heated on last Friday. I mean, they got hot last Friday. Of course, okay, I was all but silenced on Monday, because Monday, you literally have this little bit of a sell off here, okay, into Friday. It's 100 handles down. There's 100 handles down, and then you have a 100 handle move back to the upside. And I'm like, okay, I guess, I guess on Monday, I'm like, all right, well, things is it's over. We come in yesterday, and yesterday, literally out of the gate yesterday, I kept saying the volatility, this is yesterday, is wrong for where the marketplace was. The S&Ps at one point yesterday were down 11. They were down like 10, 11 points, but the volatility was actually like up. It was up at like one point, like 50 cents. And that crap did not make sense. Okay. And that's the kind of stuff I try to pay attention to. So my whole like logic yesterday is like, oh no, volatility is not dead. So this morning I tune in, and the S&Ps are just, they're very chopped out. They're real fast. They're not moving this morning in a big range. Okay. But there's a lot of scary moments going on. And quite frankly, I don't know what it's about. Like you can't put your finger on it. You're, oh, it's this stock, it's that stock. This is not an individual stock thing. What's going on is movement inside of the S&P futures, okay? And I'll just give you for what it's worth. We're 15 minutes into a trading day, okay? And the volume overnight kind of sucked. Like we did like 150 something thousand contracts in overnight trade. The volume kind of sucked overnight. But look at this crap. We're substantiating over 4,000 contracts a minute, which is not heavy, but it sure as hell isn't summer trade. Like there's clearly, we're getting it done. Bear with me here a second. I hear something weird. I hear something weird. Okay. I haven't been in this office now in like 2 months. I spent a month in Flagstaff, a month in the island. I've been in this office for 3 days in like the last 2 months. There's weird things going on in here, man. Okay. A lot of dead bugs too. Dead bugs. So there's some volume kind of coming through this marketplace. And I looked at this morning, and I'm like, well, what do we have on the tape to influence the tape? There's absolutely nothing. There's literally nothing going on today inside of the tape. There's again, there's Timmy Cook hitting the capital over there. And again, a nothing advanced decline line. Market right now is left to its own devices. But as I said to you guys a moment ago, you have a market cap right now, and just hang with me on this thought. You got a market cap right now that's $3.1 trillion. You got $3.1 trillion pulling us, by 3.5%. And yet the NASDAQ, it doesn't feel all that strong. Okay? Maybe it should explode to the upside. Maybe that is going to be the path, Okay, the path to the dark side is to the upside. Anyway, but maybe that is the path. Okay, but this is something like keep your game face on a little bit for the remainder of this week because the rumblings of volatility, okay, are still absolutely with us. And moreover, like even today, this volatility futures contract is all wrong for the S&Ps being up 10. It's the same thing as yesterday. It's just a little different in respect to, so the markets are rallying, the NASDAQ is rallying, but the volatility futures, like they can't calm down. Okay. Which is just indicative of like, I can't calm down. I can't calm down. And that's exactly what it is. You look, you have the financials, they're up. The financials are up. Okay. Decent little bit under the financials, the energy sector, decent little bit under the energy sector. What do you got here? Okay, nothing out of any of the tech stocks. You're really not getting any price action out of the tech stocks. Tesla's up 2.5%, and Apple. Okay, and yet it's again, it doesn't feel like all that strong out there. Okay, with that, here, by the way, here comes the Nasdaq. As I was saying, like it should feel a hell of a lot stronger, in my opinion. And as we rally in Nasdaq, you want to see these volatility futures like fall, and they haven't. You just saw in the last 2 minutes, there they go. Okay, but you just saw in the last couple of moments, like the S&Ps rallied 5 points. Like they literally in the last few minutes since I've been talking about this, these things rallied, okay, by 5 points. They're trading the 34 handle. 2 minutes later, they're trading the 40 handle, okay. And volatility still, it came down a little bit, okay, but nothing is sounding like an all clear, which is, again, all I can say to you right now is it's unusual. VVIX, coming down to VVIX. I haven't looked at this today. Okay, neither of you. And right now, it's basically flat. So you got to see certain indicators kind of, kind of compress back down for things to kind of mellow out. There is one thing I taught in a volatility class, and I'll talk to you again. Once we actually cross through this 110 region on VVIX, I didn't mention this so much yesterday, okay, or Monday, but once you cross through the 110, okay, and this is again, it's VVIX, and for those of you if you're a little bit newer, it's the volatility, okay, it's the volatility of VIX. Bear with me, I'm just checking something out over here. So it's the volatility of VIX, and when you're looking at VVIX, what it really indicates is kind of like institutional hedging activity. Okay. When it crosses through 110, the one thing I did say yesterday was it takes a while to kind of resolve a lot of that hedging activity. But in effect, okay, anytime we cross through here, the following like several weeks, you have to basically be on your game. And the reason being is, okay, this is indicative of there was some really, really heavy hedging activity that went on. And you're like, oh, it only went on for a few minutes. It doesn't matter. Those trades were placed. So you have to understand that there is a faction of the professional world right now, okay, it's like game on, like they got their hedges in place. That is, I mean, it just basically means that anything can happen in the marketplace, and there's a huge faction of the professional world that's got hedges on. Okay, so they have those hedges on. It's not necessarily like a self-fulfilling thing, okay, but it definitely, okay, will continue to kind of resonate with volatility. Effectively, what I'm saying is once you cross through this 110 region, even for a few minutes, whatever it is, okay, it just basically sustains volatility for the next couple of weeks. It sustains the possibility of volatility. And this is something that, I went back with a couple of buddies of mine and we did like a lot of regression analysis regarding VVIX, okay, and instances of volatility in the S&Ps. And we went back in a lot of instances when I say that, like, even if it crossed through like a little threshold over here, all of a sudden, boom, it comes back. And, it's like again and again and again, you see this occurrence, okay, where volatility just spikes for a brief moment and then it continues to kind of pull and resonate, right? And I'm just showing you like off the cuff, and you guys are welcome to do some of your own homework, okay? But here's a spike in volatility, okay, and it continued to actually occur again and again. It's in effect, what you're saying is, in this case, the market kind of gets caught in feedback loops, okay? And there is absolutely, let me use the spiders for this, okay? there's just no question the market's actually was caught in this incredible like positive feedback loop. And it forces, okay, all these firms to continue to hedge in the dynamic of the marketplace. And when you hedge in the dynamic of the marketplace, it also forces you to compress volatility. Okay, whether you guys know this or not, okay, in the professional trading world, they honestly really don't like what you guys hear on CNBC. That's not like the professional trading world. That's like portfolio managers. Okay, monkeys that manage money, like in 401ks and crap, isn't professional trade. That's just, that's a monkey that manages money. I know Jeff Bierman rips on him all the time, and rightfully so, but I get it. Like, look, if you can manage a few $1 billion, okay, of assets, if you're a registered investment advisor, some of the registered investment advisors, their fees can be anywhere from like 0.5% up to like 2%. I'll just tell you right now, if you manage $1 billion and you get 1% every year at the beginning of the year, yeah, okay, it's pretty good business. Pretty good business. Okay, if anybody has that $1 billion, I'm 1%. All right, I could do that. Early in my career, along with a gentleman by the name of Tom Sosnoff, okay, and Steve Rashis, we managed 400 million under management as registered investment advisors. And it was one of the things that when I originally came to Thinkorswim, there wasn't a position for me. What do they say? Jack of all trades and master of none. I worked at Thinkorswim managing, okay, a portfolio. Like I didn't actually get to make the decisions, although I made all the decisions because I just did whatever the hell I wanted. But at a ripe old age of like, yeah, I think I was 25 or 26 at that point, and was trading like $400 million, and I was doing a collar for one guy on Goldman Sachs. It was awesome. That was some of the most fun trade. It only lasted like a couple of weeks, but some of the most fun trade, putting this gigantic collar around Goldman Sachs position for a guy actually that ended up being a board member of Thinkorswim. Anyway, you're doing this, okay, and you're like managing money, okay, and you never like it never even occurred to me like one time what the management fee is. I didn't even care. Didn't care. Who cares? There's like a management fee, like whether it was $1 million of my own money, 400 million to somebody else's money, it doesn't matter. Like you're still managing quite a bit of capital. But I was literally working as like a registered investment advisor. But at the same time, okay, we were building, technology for like Thinkorswim, and then I went on the road after that, for them. Nevertheless, I'll fast forward over here. So we're caught in this kind of positive feedback loop. And what, like a market making firm, which market making firms are often called dealers, okay? What a market making firm would do is they have to hedge in the dynamic of the marketplace. So as the market goes higher, they're usually buying. And the reason that they're buying is this. Retail buys calls when markets go higher, okay? Retail, okay, does all kinds of things that are bullish when the market goes higher. And it actually forces the trading firms, okay, to sell you, like a call, and then they have to lock in the hedge by buying shares. So you get caught in a positive feedback loop. What they also do, though, is to further their position. Some of them actually, a lot of the firms will actually be like short volatility in an up market. Okay, so the more that we actually get into this feedback loop, the more that volatility, I actually call it compression, but it really is like volatility gets suppressed. Okay, and suppressed is just like it sounds. It's like literally like you're holding me down, man. So volatility kind of gets suppressed, and you start to, as volatility goes down, it actually causes other market making firms to have to get bullish anyway. You get caught in this wild positive feedback loop, which has been well tracked. And the real, when I really started seeing these in much more depth, okay, it's 2017. I always mention 2017. It's when I started recording data in the SPX. What happened in 2017 and what I think caused more positive feedback loops, okay, was the little invention, okay, called weeklies. So they had weekly options in here already, but they started putting in Monday and Wednesday expiration. The moment they started putting in Monday and Wednesday expiration, it changed the nature of the beast. because everybody started trading for now, not tomorrow, not a week from now. That's you. Okay. And that's okay. But the professional world started trading now. So all they basically do, okay, is they just trade in these feedback loops. Okay. And that's it. So we get in these positive feedback loops for considerable periods of time. Nevertheless, okay, the truth is, okay, in just the last couple of days, that positive feedback loop that you're seeing in here, okay, was wildly disrupted. And it really, it seems to only take one disruption, okay, to shake it loose. And that's maybe where we are right now. Okay. I literally am telling you, like, we sold off and boom, we just rallied right back up. It's like last Friday didn't happen. We were down 111 points. Boom, you're up 111 points on Monday. And then yesterday, though, the S&P sold off like 30 points. Everybody goes, that can't happen. Okay. Can't do that to our pledges. Well, we can do that to our pledges. So the S&Ps last night sell off by like, or yesterday, I should say, sell off by 30 handles. I don't care who you are. You were surprised by that. I was surprised by that. Okay. Oh, I wasn't surprised. Like, come on. You had this 100, this big, huge 100-point move down. Then you have, hold on, lots of volume on the down move, no volume on this up move. Okay. Then you have 30 handles. And where are we right now? Basically unchanged in the day. But we still continue to have some relatively fast, and like the trade right now feels fast. It feels like kind of broken, disconnected. Okay. The NASDAQ, which in my opinion, the NASDAQ should have exploded. I mean, you're like, oh, it is exploding. Maybe, but it should have exploded to the upside. You got Apple up like 3.5%. It's faded a little bit, but the marketplace, though, okay, it just doesn't feel all that healthy right now. And some of the moves, as I said, they're fast, they're disconnected. You realize the S&Ps, they're up 12. They're up 12. Look at some of the candles in here. Okay, we got some problems, people. And the reason we got some problems is this is a move from 29, okay, just to point out, to 35. It's a 6-handle move, 6-point move. The S&Ps have only moved 12 bucks. What the hell is going on here? Okay, we're trading in this range, okay, and we're traveling in that range, okay, at like light speed, but we're in this really defined like can. You better be careful, right freaking here. Be careful, because what this is this incredible compression, okay, and it's going to rip. And right now, I would have expected the NASDAQ to have ripped. Therefore, on an intraday basis, okay, for right now, I'm not all bared up with no place to go. I know that Timmy Cook is coming out to speak over here, but there should be a little bit of more downside activity. I think you had your opportunity to rally a multitude of times today. Okay, it's hard. You would think it was hard to sell off with Apple up this much. Okay, but the marketplace right now is struggling. Okay, a lot of compression in here, and it still seems like quite a bit of volatility. The other thing that I can't tell you why, there's a hell of a lot of volume for nothing happening. Okay, doesn't matter what walk of life you come from. If you look at S&P volume, you have to agree with that. Why are we doing 5,000 contracts a minute? We're not moving. Nothing's going on. There's nothing hitting the tape right now. Okay, and 5,000 contracts a minute. Like, there's a couple things on the screen that just don't add up. Volatility is starting to come off, okay, minimally, but it's starting to come off. That would be the most positive sign on the screen right now. So, and down the list of the usual suspects, like, I don't see anything really dragging this marketplace back down. Okay, I mean, do you? So it's okay. You can say like, oh, I see this stock, I see that. I know about AMD, okay, but AMD is just not, come on, man, put it in there. Here's AMD. AMD, which is down like 5%. It's got a $9 move. Just to quickly point out, AMD was expected to move 15 bucks, 14.50. Actual move is about 10 bucks. Okay. It did, okay, come down and rallied a little bit, but like AMD, with all due respect, isn't really big enough to move anything. 5% move on a $300 billion market cap, that's not going to do anything to the marketplace. So it just feels like we're dragging here a little bit. All right, with that, coffee, that's what we need. All right, so again, it was, I'm inclined to believe the NASDAQ should have exploded to the upside. It really hasn't. The day is young. Okay. Nothing is really putting too much drag in the marketplace, but just kind of feel like we can't get out of our own way today. The advanced decline line is complete and total swap fest. I haven't even looked at ticks today because, quite frankly, they've been neutral. I see them on another screen over here. They've been flop-tastic, if you will. Positions that we've got on. Let's jump to that. Okay. Oh, look at that. The S&Ps. Okay. I think they moved. That's the kind of crap I would have expected. All right. And again, like I think we're still going to see some pullbacks throughout the course of today. So look, I'm not like wildly bullish or bearish in the day. I'm saying there's going to be a lot of two-sided trade. I want to make that clear. And the pullbacks are going to be vicious in an intraday basis. I can't tell you where this thing is going to close, and neither can you. This is again, like there's echoes of some volatility in here. There's only about a $30 expected move in the day. All right, on to positions. Not much going on. We only have right now EEM and GLD. Okay. Remember, GLD, this is the third day I've had it on. I put GLD on, I believe, on Friday. Okay. So I would have that trade on for Monday, Tuesday, Wednesday. So it's trade date plus 3, looking for a 30% gain. If I don't get a 30% gain, okay, then I sit and wait for a 55% gain. Okay. Look, the whole logic of GLD, I know I'm in GC, but the whole logic of this is it's going to break out to the upside. Okay. I think it's a pretty good logic. It was actually a Brandon Chapman one. I'm like, I think it's a pretty good idea. And the reason I think it's a good idea is this thing has been channeling back and forth and flirting. Okay. Flirting with like, right where we are in here, 34.50-ish. Okay. Comes up there and look, even today, there's a little bit of sell side activity in gold, but it can't quite conjure real sell side activity. I'm telling you, it looks like it wants to break to the upside. And who am I to stand in gold's way? So here we are with the GLD, the trade that we have on some 30 days out. Look, we have plenty of time in this trade, and we're pretty much right on the dance floor. You're where you want to be. So don't read into every single tick too much. Today's another day where we're seeing the dollar be sold. Okay. Well, the logic is if the dollar sells off, maybe gold perpetuates a move to the upside. The dollar sell side activity today is not big league, but there is some selling in the dollar, kind of reverting back down, right? moving along. So the GLD position, look, if I don't hit 30% today, it's fine. We might hit it today. You don't know. So, some 15%. Okay. Maybe Tim Cook's announcement starts to rock the market. By the way, I'm going to just tell you, that's the kind of move, you would expect in the S&Ps. They're moving 6 points inside of like a minute or two. And all of a sudden, oh, now we're up 21. But there's quite a bit of volatility in the tape. And by the way, the other interesting thing this morning, look at this. The second we actually rallied up, the volume disappeared again. Okay. There's curious things going on right now. Sometimes you see things on a screen that you can't necessarily put your finger on, but like it's just more volatility. Okay. Kind of on the way. So we're offsetting yesterday's sell side. Here, this is a good time today. Let's go cruise to the SPX. Go to the SPX. Do it. Where are we right now? On the week, we're just a little bit more than halfway home to the upper edge of the expected move. Okay. And always important to me to kind of know where we are in the week. So this from here to here, that's 133-point move, obviously to the upside. Okay. It's a 133-point move, higher or lower. Where are we on the week? We started basically 62.40. Okay. Trading what? 63.20. So you're 80 handles right now. Okay. As I said, you're exactly 80 handles north of where we started the week. Okay. With again, $133 expected move. So there's still quite a bit of price action that can occur. There's no question, and there shouldn't be a question in your mind when you're leaning closer to the upper edge of the expected move. Okay. If we rally a bit more, you push into it. Okay. And you will, and push into the upper edge of the expected move. Okay, that would be fortuitous, pushing to the upper edge of the expected move. It's not the all-time high in the marketplace. The marketplace reversed violently, okay, off of big earnings last Thursday and Friday. Um, and the all-time high in the SPX though is again, you're exactly 100 points away from it. It's probably an unlikely occurrence this week. 100 handles higher from here is is a little bit of a stretch, but Tim Cook and Trump could actually announce like world peace at some point. World peace found in a server. Okay, speaking of Apple, have I mentioned lately? I think that this thing sucks. Yeah, I do. I just do. I don't really like my phone. Sucks right now. It sucks. Not as bad as Disney though. Disney and the NFL. So does this mean that we're actually eventually going to build like an NFL theme park? Eh, okay. Where a 320-pound lineman comes over and like hits you on the way in. There goes little Johnny. Um, that would be awesome. Have you guys ever been to like the NFL experience? Okay. For those of you who have no idea what the NFL experience is, when the Super Bowl comes, the week before the Super Bowl, they do this like NFL experience, which is like not really like a theme park, but it's like a whole fair surrounding like NFL stuff. Okay. First thing I would say about the NFL experience is that it sucks. Not because it's not fun. It's absolutely awesome. Okay. But it was so freaking busy and so ridiculously expensive. Like, it's not even fun. It's like I feel the same way by right now about Vegas. Vegas is getting all kinds of bad press lately. The NFL experience is like a miniaturized version of like Vegas. Like every turn, somebody's like, money, money. Okay. I'll have one of those $11 Starbucks there in Vegas. Speaking of Vegas, I keep seeing constant like bad press about Vegas. I'm actually quite surprised about it. But at the same time, I hate to say this, but I kind of agree. I haven't been to Vegas in years because every time I go there now, it's not for business. I'm just going there for like, whatever. I'll go up for a night with my wife. We're only a 40-minute flight. I can take a semi-private jet right here at a Scottsdale Air Park for $800 round trip. You can't beat that. Literally, when I say semi-private, it's like just like there's just two seats on either side and an aisle in between, and only like 30 people fit on the planes. It's $800 like round trip per person. It's an incredible deal. Anyway, what's it called? The island, the airline. It's JSX. JSX. You guys should look at it. Anyway, so we flown up there, and it was not like disappointment. It's just like, holy crap, we were there for like a night. I think we spent, and we didn't gamble at all. I think we spent $3,000 or $4,000, and we didn't gamble. Like, how is that even possible? And that, by the way, $3,000 or $4,000, and that was not including the flights. Okay. I remember though, like, I drink regular iced coffee. I think it was like $8, and then my wife was like something, I don't know, like tea crap, like mocha chai crap. It was like $11 for like a cup of freaking Starbucks. Okay. By the way, this brings me back to the thing about Disney. I can see like Disney opening up like a hotel, in Vegas with the NFL experience in it. Okay. I do like the idea though of the lineman like hitting little Johnny as he walks in the door. This is a good idea. It's a really good idea. And that brings me back to the fact that Apple still sucks. Okay. Yeah. Continuing on. Uh, uh, so it's crazy. Okay, it's crazy though how expensive, if you will, like the evening in Vegas happens to be, and it's a lot of stuff like that. It's just again, the Vegas just doesn't have the same feel. By the way, I want to jump over here to the energy sector, channeling back and forth. One thing I wanted to bring up today, specific to the energy sector, I'm going to bring this up in terms of expected moves. Okay, the channeling back and forth, it's breaching expected moves. Okay, pretty readily, hitting upper and lower edge of the expected moves. If we can get a little bit of a bid back under the energy sector, I think it's actually a good time to short it, looking for a move and a break lower. Okay, I just I forgot to bring this up earlier, trade. I have been shopping this for well, the last couple of days. Okay, I basically said, last time it sold off, like the next time it gets a bid under it, it's going to come up and it's going to fade. I would like the energy sector to be a little bit stronger before I try to fade it because I feel like I'm still kind of shorting into a hole. We may not get the opportunity in here. I just caught the corner of my eye because it's up today. I just wanted to see how much price action it's got. Nevertheless, okay, this looks pretty opportunistic at this point to me for a fade. Just so you guys understand what I'm saying here. It's obviously been range bound. I think it's going to break the range to the downside. Okay, pretty consistent weakness and testing right around this 85 level. You break the 85 level, okay, there's just not that much down below. So if it gets a little bit of a bid back under it today, I may take an attempt at a short position. Frankly, though, it's too early. I am very comfortable waiting for that trade to kind of come to me. And if I miss it, I miss it. It is what it is. All right. So onward and upward over here. So just wanted to bring up today's expected move is basically $30. The expected move today is basically $30. We never hit that. Okay. Markets are still most definitely on edge. I said that obviously yesterday. I said it on Monday as well. Okay. You can feel it inside of the tape. As I said to you today, and again, you can question it and that's fine. You're going to get violent pullbacks throughout the course of the day. There's two-sided trade. It's opened in this marketplace. There's no question about that. I think the only question is, does volatility start to come back up again today? So the VIX subsided to some degree, okay? But like a 17 VIX, that's not to be taken lightly. Especially like it's weird to have like a 17 half VIX when markets are 100 handles away from an all-time high. Like, again, there's nothing in volatility right now that leaves a warm and fuzzy spot like in my stomach. All the indications for volatility, it's not that like we're about to get hammered. That's not the intent of me saying that. The intent, okay, is that volatility right now is saying we're on the edge. Like you wouldn't have a 17 half fix. You wouldn't actually have, an 18 like vol future. And the vol futures, they only have 14 days left. And they get pulled down. But the back month volatility is really freaking high. Big contangos in here. You're going to get two-sided trade today, unequivocally. And I said to you, I would expect the NASDAQ to rip. It did. And now it's pulling back pretty violently. Where we're going to close today, and get a better feel for that as some of the announcements actually break. I don't want to sit here and try to justify like we're going to sell off again. Okay. I don't want to try to justify that, but I am going to tell you, you're going to get some two-sided trade. Okay. Tape wouldn't look like this. You wouldn't have this kind of volume if we weren't going to see two-sided trade today. All right. Back to it here. So Apple obviously, OpenAI selling stock. And if you guys caught this story, it's actually quite interesting and has some even more interesting ramifications. OpenAI, as most of you know, okay, is one of the and primary driving forces behind, a race to super intelligence. OpenAI is going to do a stock offering. The stock offering has nothing to do, okay, with the open marketplace, meaning it's not an IPO, not yet anyway. What they're going to allow, okay, is some of their, engineers, the developers, to sell, insiders sell shares of stock. This is to basically incentivize them in some ways to stay with the company. And if you're not really familiar with this, when Microsoft came in, not even that long ago, and bought basically 49% of OpenAI, the deal was a couple of $1 billion here or there. It was nominal. Right now, what's going on with OpenAI, their last fundraising, I believe, was done at 300 billion, and they're going to be valuing the company at about 400 billion, I believe, that's not set in stone, but I believe it's going to be 400 billion. But some of the people that work there are going to be allowed to sell some of their stock. It's to basically incentivize to release some of the liquidity in there. I mean, you're going to have some people that may own a fraction of a company okay, that now is worth $400 billion. Some of these individuals could be sitting on $100 million of stock. The only downside of this, okay, and I think that everybody that works at OpenAI is about to actually face reality, they're going to get absolutely annihilated in some taxation the second they actually sell that stock. There's just no question. They're going to have to sell the stock, and then half that money is probably going to go to taxes. There's not a lot of ways around that one either, unless they have some like massive like depreciation in an investment. Nevertheless, it's an interesting facet of a company that's trying to hold on to some people. So the way they're going to hold on to the people is they're going to actually let them, sell some stock, minimal amounts of it. I think it's actually a pretty good hedge. Like if you owned, I'll just give you an example. If you owned, 10,000 units, you might want to hedge by selling 1,000 of those units. Okay. You might feel like an idiot because it could be like a $3 trillion company in a couple of years, but to actually sell a tenth of your stock, okay, just to release some of the liquidity and be able to afford a couple things, not a bad idea. Again, the taxation of that though is going to be just is absolutely brutal. So Eddie, I want half. So am I drinking enough water? Can't drink enough water. It's 9% humidity here. And this is not water. Okay. Does that look like water to you? If your water looks, I'm actually drinking stock. I'm drinking stock right now. It's too freaking hot here. Have regular coffee. It's ridiculous. It's literally going to be, I think, 114 today. Let's look. 114. By the way, I was out yesterday at 3 o'clock with the kids. I actually took the kids. They like, sometimes I chauffeur them around. Oh, I apologize. Today, and this is in Paradise Valley, it's only going to be 113. Tomorrow it'll be 114. And that's in Paradise Valley. If you actually go down to Phoenix, okay, yeah, Phoenix is a cool 115. You can't make that crap up. And that's not gonna be good, buddy. I got to go back to the mountains. I hate it down here at this crap. 114 degrees. Okay. Oh man. So I drive a black vehicle. It's really bright to do that in Arizona. A black vehicle with a black interior and metal handles. Like the door handle because it's a Tesla. It like pops out. Couldn't possibly be hotter. Couldn't possibly love the dry heat. It's not a dry heat. It's like an oven, man. It's bad. Okay. It's bad. It's like hard to almost walk in. Okay. Holy crap. David, you have the cold brew Jura. Is that the S something or other? Okay. That one's nice, man. Okay. I've been told I'm not supposed to buy that one. When we rebuilt our house, we got a Miele. Okay. All Miele appliances. And we have like a Miele like built in. I think it's pretty good, but it doesn't make cold brew. Okay. It's like God, I want that Jura. It's like $3,000 though. Okay. I've been told not to buy more coffee machines. That's what I've been told. Actually, I have my other Jura here. It's like literally sitting in a box over here. And I bought that at Costco. So theoretically, I could return that one for like $1,000. And then a new Jura would only cost me $2,000. Okay. She didn't say anything about that. She did say though, if I ever buy a Cybertruck, I'm sleeping in it. Okay. That's a quote from my wife. Buy a Cybertruck, sleep in it. And I'm like, I don't know. I'm still thinking about it. Safer. I have to sleep with like an eye open. At least the Cybertruck will love me. Continuing on over here, the XLF has actually backed off a little bit. Earnings today. There, I got 2 seconds to tell you guys a quick story. The OpenAI thing, the reason I was really thinking about it a lot this morning, when Thinkorswim went public, okay, Thinkorswim went public by doing what's called a take under. We didn't want to do a roadshow and so forth, and it was just eating up too much time. So we actually merged with the company. We were smaller than the other company, but it was like a take under, and it made us public overnight, it was kind of cool. But when we actually received stock and cash, we did half stock, half cash. And a lot of people don't know about this. Let's just say that the stock was given to us at 17. So all of a sudden, you get stock at 17. which is effectively you're paying tax to 17. So the cash, like the deal though, was half stock, half cash. So you get stock at 17, and then the cash was given to you. So let's say you got $1 million of stock and $1 million of cash. You're like, yeah, baby, $2 million. Except as everybody found, they had what? They had to pay taxes on the $17 stock. So they paid taxes on the $17 stock. What did they have to pay taxes? Some of the people like live in the Chicago area, the taxes were high as nearly 50%. So literally they were gifted shares, okay, at 17, $1 million of stock at 17 and $1 million of cash. All of their cash was used to pay the taxes that year on the stock. Okay, you with me? All right. So, all right, some people understand what we're talking about. Okay, and there's alternative minimum tax in there. Now here's the interesting part. The deal actually happened in 2007, and the stock was in a lockup because everybody that was given stock was technically an insider, and you were locked up. And you know how long you were locked up for? Anywhere from 6 months to a year, depending upon who you were. By the time that the stock unlocked, we were in the middle of the financial crisis, and we're a financial stock. So the stock descended from 17 all the way down to like $5. So now you had $2 million, $1 million of it you spent on the taxation. Okay. The other $1 million evaporated overnight. People got killed in it. And this is the actually the plight. You could not do a collar at that time either. Collars were already banned by Sarbanes-Oxley. Myself, okay, I actually joined of the original core group of Thinkorswim. I joined, okay. I was like a little youngster and I was contracting. I didn't fully come on till 2001. I didn't actually get in the original stock distribution. So my deal, okay, was actually done in cash. And I was pissed about it. I'm like, getting cash. And then like, the financial crisis happened and I was like, I got cash. Better to be lucky than good. So I've never really told that story before. It was actually quite scary because some of the people that worked at Thinkorswim that had, millions and millions of dollars, it got hammered overnight. The company went public and so forth. And then we got bought by TD Ameritrade. And TD Ameritrade, okay, they didn't do that much for people. I was one of the few people that I got a 5-year deal with TD Ameritrade. Okay, they did not do that for a lot of people. A lot of people are like, there's the door, it's crazy. So Sosnoff always wanted to make $1 billion. Like he literally wanted to sell Thinkorswim for $1 billion. The word with the B was a good one for him. So that's why he built TastyTrade. So he had to make the trade come out for like $1 billion. Okay. Shopify had earnings. SMCI. So this has actually been a pretty interesting area of contention. I absolutely hate this company. I really do. I don't like Supermicro. I actually looked at this extensively. For those of you who don't know, the firm that's no longer, it's called Hindenburg, had this huge press story about them, how this company's a huge scam, yada, yada, yada. Anyway, the stock actually remains in business. Their most recent earnings, okay, were fairly devastating here. They're down 20%. Just to make a quick point with this is the high volatility stock. It was expecting like a $8 expected move. Actual move, though, is outside of that, only minimal. Okay, it hit kind of its expected move and slipping afterwards. So this is not like an unfounded move, but it is a big move. And SMCI is actually hammering, okay, Dell a little bit today too. Okay, what did Dell do? Well, Dell didn't even have its earnings, but it's getting a little bit more sketchy out there. But Supermicro, the weird thing is that technology is performing so well. Like look at NVIDIA today. Unfazed, but NVIDIA had to face with AMD seeing some sell side activity and Supermicro seeing some sell side activity. There's two bad earnings reports from pretty critical areas inside of tech. Again, I don't really buy much into the whole SMCI thing, okay? But nevertheless, okay, Dell, okay, they're real, and AMD is absolutely real. Onward from there, okay. McDonald's, McDonald's, slowness in China, yada, 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 okay. But the stock is actually up very, very slightly, up about like 3%. Nothing over here. Okay. By the way, they're raising prices, which the marketplace actually liked. So now you can have a really crappy hamburger experience for even more money. It's exciting, but nothing could be more expensive than Five Guys. I won't even go to Five Guys anymore. I'm done with them. Okay. But I do want to go back to the In-N-Out Burger in Flagstaff, Arizona, because it's the greatest In-N-Out Burger ever. Okay. Hey, don't you make fun of McDonald's. I haven't eaten there forever. It's been like 10 years. I will admit, okay, before I realized I couldn't have gluten, I would go to McDonald's. I'd be like in an airport. Okay. You're in an airport, you're like, it sounded good. It sounded good. I always felt like crap though after eating it. Okay. I didn't feel like crap though when I was a kid. That's because they still put meat in the burgers. Okay. Yeah, Five Guys though, like for a family of five, and I can eat at Five Guys because they do have a gluten-free menu, but I can eat at Five Guys, but like legitimately for a family of five, easily $120, $130 easily. You're like, what? Yeah. If you go there, by the time you get like the double bacon cheeseburger and all the crap on it, yada, 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 you get a couple of like bags of fries, and the fries, like the fry, it's so greasy that it actually pours through the bag. Party. It's a party, but it's outrageous. Absolutely. It's like over $100. It was the last time I went with a family of five. It was like $120 for it. And that was in Payson, Arizona. So I go to strange mountain towns to have burgers. All right, onward. Onward. What else we got in here today? Uber. Okay, do I really care about Uber? Nah, I'm a Lyft guy. Actually, I've been using Waymo. Okay, Waymo. There's not a day that goes by. There's not a Waymo at my house. I have a 15-year-old daughter. Either somebody's coming to my house in a Waymo, leaving my house in a Waymo. Waymo it is, and it's every time they go someplace, it's like $6, $7. It's a great deal. So they encourage like kids to take Waymos here in Phoenix because there's no driver. These are the driverless vehicles. Pretty phenomenal. By the way, the advanced decline line here is now pure 50-50. NVIDIA is seeing a little bit of selling. Meta actually really reversed on the day. And people, it's an Apple day. Okay, it's an Apple day. As I said to you, though, you're going to get some vicious two-sided trade. You didn't think that was plausible when we were up over 20, did you? Okay, you can see it. Volatility right now. Okay, again, this doesn't add up. What doesn't add up? You got volatility basically flat on the day with the S&P is up, and the Nasdaq, okay, with sustaining some pretty good gains. Keep your hands and feet inside of the vehicle here. Like financials have actually gone flat in the day. The energy sector has actually gone flat in the day. I said I wanted to short energy, but I think I'm actually going to miss that trade. The list of usual suspects over here, gold. I'll keep an eye on gold for the possibility of closing it, but it would need a pretty considerable move over here. So, ladies and gentlemen, for the next hour, okay, you will be joined by Gianni De Poce. I'm actually going to be back on a little bit later today, which I think you guys will actually really enjoy. We built something. Okay, we built something here at TheoTRADE, and we're going to show you what we built. So we built something. Okay, what's the something? You'll see it. Okay, you'll see. I can't talk about it. We will talk about it today. Today, right here, 11 a.m. Pacific time, silent surge. So we're actually going to show you a little bit of piece of technology that we've actually built with that. Johnny, how you doing? We built a taco machine.
You
Pork,
built a taco machine?
pork tacos. By the way, I came off the island the other day, and for some weird reason, I'm like, all I wanted to eat was like pork tacos. I had pork tacos for like 3 meals in a row. Like Costco, the little like thing of pork. Okay, it's good, man. I was all over it. It was pork tacos. I'm still got a little bit of a pork taco thing going on. I
Well,
can't even eat
here's the sandwiches, the prosciutto sandwiches. So that's what I'm going at right now.
Oh man, yeah, that's good stuff. Prosciutto is good stuff. Is the olive
Yeah.
oil
Oh,
like
yeah.
that much better? I mean, do you taste like? I mean, is the food that much better than it is here in the States?
Oh, I mean, I think so. The olive oil is like a different color. That's
I
what I would
know,
say.
I
It's
know.
the
I've had many times. I've had like real Italian olive oil, and I'm like, what the hell? The U.S. stuff doesn't even look like this. It just doesn't even look like it. You look like a gallon of stuff at
yeah.
Costco. I'm like, that looks like motor oil. It's like 10W40. Yeah, the stuff coming from there, it's like lighter. It's good. It's good stuff. What are you covering this morning?
I always tell people, try to get your olive oil from your local Italian grocery store. It's probably going to be of a better quality.
Interesting. Okay. Okay, we have a bunch of those here too.
Yeah,
So
yeah.
I get my Jardiniere from my local. It's Chicago Italian though. It's not really Italian. It's Chicago Italian.
Well, in Arizona, they got olive trees, don't they?
Yeah, they're really allergenic. Like it's they're everywhere. The olive trees
Yeah,
here are everywhere. They
yeah.
were imported, and I don't like them because they shed their crap all over the place.
Mm.
Yeah, yeah. Somebody's saying everything tastes better in Europe, except Europe. Europe doesn't taste that good. Um, what are you covering here the next hour? Anything you see that's interesting today?
Well, I saw you talking about Apple. I think that is a good sign for the bullish case, but I'm still with you in the sense that we still got some downside risks, and I think that's represented by what happened in super microcomputer.
Yeah,
And then you
yeah.
have advanced micro devices taking it on the chin a little bit. I already scaled out of AMD some, so I'm not really too worried about this pullback. Being someone that owns this stock for a little bit longer, hopefully. But on the bright side, we did manage to scale out of Astera Labs, ALAB. That's another chip name that's up over like 30% on the day.
Oh,
So take the good with the bad in this tape, but I think it just speaks to the risks in this market right now. So we still treading carefully.
sorry, I'm just cracking up. I prefer gas station sushi. Sorry, I'm
Gas
reading
station
chat.
sushi.
Gas station sushi, man, and that's where it's at. That is where it's at. All right, I'm gonna turn it over to you. I gotta run. I'm actually gonna go hop on TD. I call it TD Ameritrade TV. Charles Schwab TV. Okay, I'm all dressed up. I'm even in big boy
Chucky
pants
TV.
today. Yeah, Chucky TV. I'm in big boy pants today. Big boy
Oh, very nice.
pants. I'm really not. It's seriously going to be 114 degrees
Very
here
good.
today. Yeah. All right. It's all yours, buddy. See you a little bit later.